Okay, so trading economic news. So let's get started with the economic calendar. Let me just bring the economic calendar up. Okay, so final day of the trading week. The weekend starts today, but we're going to have some fun in the markets before the weekend. So today is Friday, final day of the trading week, 7th of May. As usual, my time zone, GMT +2, which is Rwanda, GMT +2. So I'll just be quoting GMT +2 times. So we're going to be looking at the euro, US dollar, and the dollar, Canadian dollar specifically as we await the report. So as usual, you start off the day looking at the economic calendar, and we've already known from the beginning of the week that we had the big report coming out today at 2:30 p.m. GMT +2 time, which is in less than 15 minutes time. So we have the Canada unemployment rate, which will obviously have a huge impact on the currencies paired to the Canadian dollar and the Canadian stock market. And at the same time, we have the most important one at the same time at 2:30, which is the US unemployment rate report and the non-farm payroll report. It's called a non-farm payroll because it excludes the payroll of the farming community. The United States has a huge farming community, but this payrolls excludes the farmers, so that's why it's non-farm payrolls. This is a very, very important report. It's a mega report. It affects all financial markets. It affects the fixed income securities market. It affects all stock markets, all country stock markets. It affects all currency pairs. It affects the commodities market. It's a huge report. And it comes out on the first Friday of every month. So on the first Friday of every month, that's when it comes out. So everybody knows, everyone who is involved in the financial market, everybody knows that the report is coming out first Friday of every month. It's highly anticipated. So there's usually a very high probability of the markets trending sideways prior to the report. And like I said, it affects all markets and all currency pairs. So best just to keep out of the markets, leave the markets alone today. And like we said at the beginning of the week, even during this week leading up to Friday, from Monday, we've been cautious trading the markets, even from Monday, just having one attempt on the market in view of this report coming out today, and because of the significance of this report. So that's what we did today. We just left the market alone today. We didn't place any trades. We didn't do any trading. We left it alone, and we're now just going to get ready, prepare for the report that will be coming out shortly. And that's also the last report of the day. Okay. As usual, you also look at market watch, see if there's anything creating uncertainty in the market. But today, the only thing that's important today really is just that US unemployment report or non-farm payroll report. So let's go to the charts as we get ready. So you can see this is the euro US dollar. You can see it's been trending sideways. It's shot up there a bit and it's still moving sideways, but we can see it did not break R1. So R1 acted as a resistance there. So the market did not break R1, and you can see it hasn't broken the pivot point. So it's just trending sideways between R1 and the pivot point. So in about 5 minutes time, we'll start placing our trades. If the market is still trending sideways like this, this will be a potential entry point to buy just above R1, and the pivot point to be potential sell point to sell just below the pivot point. But I usually like to wait till a couple of minutes before the report comes out before I place my pending orders, just in case there's a bit of spike in the market just before the report comes out. So I like to wait till as close as possible to the report, at least 5 minutes before the report, before I start placing my pending orders. So let's look at the USDCAD. So looking at the USD CAD, again this morning it was trending sideways between those two white lines, but you can see it's broken the high point of that sideways trend, but again it's still just trending sideways, but it's getting pretty close to the pivot point. So I'll just delete these white lines. They're no longer relevant because the market has broken that sideways trend. But by and large, it's still trending sideways, but just below the pivot point. And you can see S1 is quite a long distance from where the market is now. You can see the current market price is 1.2187 and S1 is 1.2101. So it's about 80 pips away. It's very far away. And because it's so far away, by the time the market falls here 80 pips, there's a very high probability it's going to start trending sideways. 80 pips is quite a long fall. So I will not place a sell order just yet. I just want to see how the market reacts to the report before I do. And again, this is actually a good example of being careful not to place your trade too early, because you can see the market is actually quite close to the pivot point. While the market is waiting, you could find it could just be going up and down. There might be some volatility before the report comes out. If you put your order there too soon, it could just spike up, take your order, fall back down, and you have a losing trade in a very short, in a couple of seconds. But looking at this US CAD, this looks like the only viable entry point. But again, we'll wait much closer. Probably this will be the last pending order I'll place. And it's really very close to the pivot point. So this is a very risky entry point. We'll leave that alone for now. Let's go back to Euro US dollar. So with Euro US dollar, it's almost 225. So we can start sort of getting ready. So we can see the R1 here is 1.2090. So 2 pips above that would be 1.2092. Okay. So that'll be 1.2092. And then 20 pips stop loss would be 1.2072. And then 60 pips profit limit. Let me bring my calculator up. I'm not going to do mental maths. So that'll be Come on, I'm trying to move the calculator up.
2152.
No, I was trying to move the calculator up so I could see the zero.
Okay.
So 2092 plus 60. So that's 2152.
Yep.
1.2152. Okay, so I've got my buy order there. And look at the sell order. It's just the pivot point is 1.20416. I'll round that up to 1.2042. 2 pips below that to be 1.2040. So again, place our order 1.2040, and because it's now 5 minutes till the report, so it's just about good time to start placing the orders. And 2 pips above that, 1.2060. And again, 60 pips profit limit. That'll be 2040 minus 60. That's 1980. So profit will be 1.1980.
And that, of course, that's a sell stop, isn't it?
Yes, it's a sell order. Yeah.
Yes, so yeah.
1980. So 2 pips below, entry point 2 pips below the pivot, 1.2040, 20 pips stop loss, 1.2060, and profit limit, entry level minus 60, 1.1980.
Yep, got that.
So that's
place.
it.
Yeah.
So we'll see what the market does. Let's go to the USD CAD. This one I'm going to reduce my risk because I have a sneaky feeling this is destined to be a losing trade because of how close the market is today. As you know, there's a bit of volatility when the report is announced, so you could just jump up, take your order, and go back down. So let's see, 1.21946, that's 1.2195. 2 pips above that to be 2197. Let me drop it to 20 pips, 20 pence per pip. You're only going to take 20 pence per pip out of me in this trade. It looks very dicey. So 97, 2197, 1 point. Actually, that's a good point. Let me finish questions. I'll just talk about that. 1.21975 and 60 pips. 2197 minus, oh, sorry. 2197 plus 60. 2257. So 1.2257. Okay, so that's as much as I can donate to the market for the USD CAD. I'm just going to donate 20 pips. 20
So can I just,
yeah.
Can I just ask a quick question?
Yeah,
Because I think I'm still getting a bit confused with the moving average. So looking at the moving average right now,
yeah.
the moving average is below it's kind of in the sell position. So you place your order below the moving average. I don't know, maybe I'm just confusing myself.
I think with the moving average, I don't know if you still have the recording from the moving average session from the course.
Yeah, I do.
Yes, because the key is understanding the moving average and keeping it simple. Because once you start to try and overthink the moving average, that's where problem.
Yeah, I think that's probably where I'm getting myself into a bit of confusion.
Yeah, because it's just trying to keep it simple. So what I mean by keep it simple is, again, going back to that basic thing we did at the course, that if you look at the moving average, this is the market in black, the moving average in red. So you can see if the market is above the moving average, is going up. If the market is below the moving average, is going down.
Down, okay.
If it's going above the market, if the market is above the moving average, it's going up. If it's going below the moving average, it's going down. So anytime the market is above the moving average, it's going up.
Okay.
And you're looking to buy. Anytime the market is below the moving average, it's going down, and you're looking to sell. And of course, so that means that you want your buy order somewhere above the moving average and your sell order somewhere below.
Oh, that makes sense. So the buy order above the moving average because you're looking to buy, and the sell order somewhere below it. Okay.
Exactly.
Okay.
So like I said, but you're right. You're not the only one. This moving average, because it's so simple, people always get it confused because it's, there's always a feeling there's something more to it than this straightforward thing, but it's really just as simple and straightforward as that.
Okay, so you buy above and you sell below it. Okay. I think that's where I was confusing myself, because when I was looking at it, because I'm looking at that chart, I'm thinking, well, the moving average is not above, it's not above the, it's below.
So the market has gone up, taking our order.
Oh, has it? Oh, let me check. Oh, yeah, it has gone up. It's spiking up, yeah.
Yeah. So we're currently in the trade, but we'll see what happens because it could just reverse.
Very good, yeah. And that is a long, it's a long candlestick. Not that I have to find out more about candlestick, but I can see it's really going up. Okay.
Yeah, but it could reverse. It could just reverse.
Yeah.
But this is why you want to be ready with your orders
Yes.
before the report comes out, because you can
I
see,
see that. Yeah.
if you say you want to wait for the report before you place your trade, you've missed it.
Yeah. Yeah.
And
Yeah.
thankfully, EURUSD went down, so it didn't take my order. But again, that's the thing, it could reverse. It could reverse. But let's see. Actually, let's see, because 30 pips. So 20, you remember we need to move our stop loss when it moves 20 pips.
It's going, it's on, yeah, so we move our stop loss to our open
Open level. Let's see, that's 2092 is the entry point.
Yeah.
So 2092 plus 30. So that's 2122, 2122.
2122.
2122. Object list 2122, 2122. 30 pips. So that's the whole reason for always getting ready with your orders before the economic news, because yes, things, especially reports like interest rates and this US non-farm payroll, which like I say is highly anticipated, you just have to be ready. So you can see it's already getting to the 30 pips mark.
Okay, yeah, no, mine obviously, because I'm trading with half of that, so it's getting to my 15-point midway.
No, 30 pips. You're not looking at the cost. You're looking at the pips.
Ah, okay, hold on. So what am I supposed to be looking at to ascertain that?
Yeah, your entry points. You can see. Okay, look at my buy order here. My entry point is well. We entered the same place. 2 pips above.
Yeah, we did.
R1.
Yeah.
R1 is 2092. So our entry point is 2092.
Yes,
so,
that's right.
So 30, that plus 30 pips, 2092 plus 30 is 2122.
Okay, yeah.
Yeah.
Oh, okay. Oh, okay.
So it's 30 pips, not 30 pounds, 30 pips. Whatever yours, because obviously how much you're risking varies.
Yeah.
So what you're looking at is you want to move your stop loss to the entry point once the market has moved 30 pips. 30 pips in your direction, which is now done.
I see what you mean. So you move your stop loss once it has moved 30 pips in your direction. Because I tend to look at money.
No, pips, not money.
Okay.
Otherwise, like you rightly said, if you're doing, let's say for example, you're doing 10 p per pips. Per pip. If you're waiting for 30 pounds, you will never move your stop loss.
Yeah.
So yes, 30 pips. So, okay, let me tidy this up a bit. So number one, we first have to delete the pending sell order below the pivot point, so you don't have orders hanging around. So I'll delete the pending sell.
I want to do that, but my screen has messed up. I can't see my pending pending order. My screen has messed up, and if I try to share my screen, this laptop is so rubbish. I'll probably be here from now till tomorrow morning trying to share my screen because I'm doing this.
No, I think the thing again is going back to knowing how to use your platform, because if you look at my own platform at the moment, you can't see my pending orders, but you can see there's this scroll up and scroll down thing here at the end, so you can scroll up and scroll down so you can see everything in your trading.
Oh, okay. Let me see if I can do that. Let me see if I can find that. I can find that. Okay, let me see if I can find that.
But let me move my stop loss now to the opening level, because obviously the market could just reverse and come back down. So I'm going to move that to my opening level. There you go. So I moved my stop loss to my opening level. So that's that. And then we'll see what happens. So with the USCAD, no change. I've got a trade on the, so you can see how they trade on the dollar Swiss franc too. So the market has fallen, taking that, but it hasn't fallen 30 pips. So I have to delete my buy order for the dollar Swiss franc too. This one. because one has to be careful when you're trading. You pay attention to what you're doing, which is what I'm trying to do. So, because I also have a trade on the dollar yen.
Yeah, I did that the other day. I let my trade run and then I put in another order. And yeah, and I realized that you need to be careful that you don't go and click on the wrong thing and cancel your trade by accident.
Yeah. So that's why I'm trying to pay attention myself, because I have quite a few trades going now. That's the dollar yen. So the dollar yen, where's the 30 pips? Where's my entry point? So that's 108.84. 84 minus 3 is 5. So 108.53. So yes, I've reached 30 pips for the dollar yen. Let me delete my pending order. Where's my pending order for that? That's it. Okay, delete. Okay, all right. And move my stop to the opening level. Now that is moved 30 pips. 108.84, 108.84. Because, like I say, yes, the market could just reverse. It could just reverse and just decide this. Now I'm going to cheat. No, it's not really cheating. Because I'm going to say this very carefully, Bola.
I'm listening.
And you don't have to do what I'm about to do. You know, do what is right. So ideally just take your 60 pips and go, which is what might happen here. Missed it. So it's gone past the 30 pips mark.
Mm-hmm.
And if it keeps going up, it's going to hit the 60 pips mark. Yep. And that's the ideal thing to do. Just take your profit and go and end the trading for the day. Now, if you've got the lever, because like I say, bird in hand is what 50 in the bush. So ideally, it's just best to take your 60 pips and go away and just be done with it and bank your profit. But if you've got the lever, what I tend to do sometimes, again, is weighing up. There's no race. It's just, again, this just comes from experience and weighing things up and looking at every situation. Now, in a situation like this, I'm not saying this is what's going to happen, but in a situation like this where it's Friday, yeah,
mm-hmm.
We've had the non-farm payroll reports. It's come out, hasn't it?
Mm-hmm. Yes, it has.
There are no other reports coming out today. Yep.
Yep.
So there's nothing else that's going to affect the market today. The big report has come out. The market has reacted. Now, if the market keeps going up, yep.
Yep.
And getting close to that 60 pips, and being Friday, being the last report of the day, and being nothing else coming out, again, this is not a guarantee. There's a likelihood it could just go up for the rest of the day.
Yes.
So what I tend to do then is just remove my take profit and just ride it.
I thought you were going to say that. I thought that you were going to say that.
But what if you don't do that and you find it gets to 70 pips and all of a sudden it turns around and you end up with no money?
Yeah. So in a situation like that, you would have to really be monitoring it to keep your eye on it. So if you feel like it's dropping, then you can suddenly just end the order.
Yes, you could, but it could be very sharp. It could be a sharp drop. This is why I'm saying that, you know, that's why I don't teach people to do that. Just take your 60 pips and go. Because, and it's happened before, you know, where you're watching it, yeah? And then you say, okay, let me just go and use the bathroom. You go to the bathroom, you come back. That can be very, very, very painful. So that's why I'm saying. So that's why I'm saying that it's best to just take your 60 pips. And that's why I was saying that if you have the lever means that you are happy to accept that case scenario when the market goes up 70 pips, where it's going way past your 60 pips profit where you could have taken it. You did not take it. You wanted to let it run. You're watching the market. You just step out for a couple of minutes. You come back. It is reversed, gone all the way down, and you end up making nothing.
Nothing. No, I think for this week I've lost quite a bit. So I traded. So I think if once it hits the £30, I'll say that's a nice high to finish on for the end of the week.
Exactly, that's the best thing to do. So that's why I kept stressing that I don't want you to get upset with me, because when I do that, I look at the worst case scenario, and if I'm happy to accept. And I think I've sort of trained my psychology that way when it comes to trading. When I trade, once I've moved my stop loss to the opening level and I know I'm not risking money, I'm then happy. Anything else that happens, even if I don't make any money, I'm not bothered. So usually I've trained my mind to be in a state to take those risks. So in a situation like this now that I've moved my stop loss to the opening level and I know I'm not going to lose money on this trade, minimum, and I know, again, going back to all the other scenarios for today, no other reports coming out today. It's Friday. It's not like there's a report of high importance coming out tomorrow. It's Saturday. You know what I mean?
Yeah.
So looking at all the conditions, I said, okay, might be a time just to take that chance and take that risk. And
No, I am not going to take that risk.
And I don't blame you. And that's why I kept stressing that. The worst case scenario. If you cannot accept that worst case scenario, don't do it, because
don't do it. Yeah.
Although
a part of me though has become a bit of devil. Oh, well, it's even dropping now. It's gone back down. It's dropping. As we've been speaking, it was on 20 odd pounds, but it's dropping down again.
Oh no, the market will go up and down. It's got. I mean, like I said to you, now that we've moved our stop loss to the opening level, that's it. At least you're not going to lose any money.
Any money, absolutely,
yeah.
Absolutely.
And then, like I say, if you leave your profit limit in place, ideally this is the time just to switch off your computer and let that thing run. Just let.
Oh yeah, yeah. Well, I have to get back to work, so yeah.
So yeah, just do that. Just leave it alone. And I think, because of the way the market is now, I don't think I'll be placing any more trades, because if the market starts to change and move around now, especially now that we're now almost 15 minutes since the report has been announced, anything that happens now is either going to keep going up or go sideways. So
I think I'm inclined to believe the side. I know you say it's not a case of never, but I do. And then especially when it gets towards the evening, when there's less activity in the market, I've noted that it tends to trend sideways and the movement is very minimal.
Yeah.
It's a few pips here and a few pips there. But aside from that scenario that you pointed out to us, I think you called it the gap something. I didn't totally understand it. But aside from that scenario, if that doesn't happen, I've noticed that it does tend to kind of stay in that sideways trend.
In the gap, I think if you go to the platform, I think...
Yeah, you spoke to us about it. That's why you don't let your orders run over the weekend.
Yeah, but the recording where it discusses is here on the featured section.
Oh, so, yeah. Okay.
So you can go to that featured recording, and that's it here. This one from a month ago. Gap in the market discussed.
Yeah, gap in the market, yeah.
So you can watch that again and see about talking
that was
about
very
that.
Interesting.
So yes, I will suggest just switch off your laptop now. Delete all your pending orders.
Oh, I've done that. When we said about moving the screen, I finally sussed how to move it, and I found it. So I've deleted all my pending orders. So it's just the one order running now.
Good. So you moved your stop loss to the opening level. You've got your profit limit in place. Yep. Switch off. Go to your work and let the market do what it wants to do.
What it wants to do, absolutely. So
I will keep watching it to see if I can milk it. Okay.
I'll leave you to do that.
Have a nice weekend.
And you too. Thank you. Speak to you next. Bye-bye.
Take care.